What's up, gentlemen?
I love the countdown clock. That's great.
It's pretty cool, isn't it? So just so you all know,
I mean, I was waiting for it to freeze up, like like Blue Origin yesterday. The countdown clock stopped.
On what?
On the Blue Origin rocket ship.
Jeff Bezos.
Countdown clock. At one point, it stopped.
Oh, yeah, really? That's you wonder if you want to go on when that happens in one of those things, right?
You should grow a mullet, Ashley. Your hair's getting long, buddy.
Really?
Yeah, get a mullet. I like the mullet, the hockey player look. Let's go with that.
High and tight, baby. High and tight. So well, it's you cut all the gray out, right? That's it.
I need to figure that out. My problem is my barber keeps cutting a hole in my hair back here. So I have to figure out. I have to figure out how to get around that somehow.
Well, the hole becomes a lake pretty soon. It just takes some time.
it's starting to work its way from the back to the front too.
Yeah, look what happened to old Beamer here, buddy. I had a hole at one time. It's turned into like Lake Michigan here. I got it. Lake Superior.
Yeah, well, that's one of the benefits my wife says of being tall. So hey, everybody. We're live. Please announce where you're from. That's somebody from Hong Kong. Awesome. Krister, great to have you on. Ask us any questions during it. So, gentlemen, let's raise our glass. If you got your MX glass, great. If you don't, welcome to the Materials Exchange, episode 16. We've gone 16 episodes, ladies and gentlemen, and we guarantee you will be smarter for coming and joining. So let's get started. So episode 16, we're going to call it Mistakes Were Made. Others will be blamed. Greg, isn't that the one we used to always joke about all the time? So you guys were both out for 2 weeks. Matt filled in on almost 3 weeks.
First of all, I feel like it just wasn't the same about you, Matt.
Well, likewise. I mean, it's funny when the three of us talk, all the stuff that flies around the room, but when it's just two of us, it's a little bit different, right? We revert back to, like Ashley and I have had a relationship for 25 years, and you and I have had the relationship separate of those, but when the three of us are together, man, it kind of explodes. It's a bigger deal, so.
Yeah, no, appreciate it. Thank you, everybody, viewers, for watching. I get stuff all the time now talking about how many people watch this, rewatching on LinkedIn and on YouTube channels, and get a lot of information on it. And that's really the intent, is to help everybody in the supply chain get a little bit more knowledge in an industry that generally that hasn't been as transparent. And just because we've got a lot more social media now and a lot more ways to do it. So with both of you being out, I think the way we want to kind of kick this off is Matt and Greg, each of you separately go for your 2 minutes and tell us what you've seen in the last 2 weeks and where we're at, and then we'll move right into Greg's market poll from this week and chat about that. But Matt, I'll kick it off with you we chatted a little bit about last night. You wanted to talk about a few things, so have at her.
Well, we've seen the last 2 weeks. Death and destruction, of the lumber market. It was we went from 1734 high to what, 530 or 540 low. That's $130,000 per rail car of lost value. Now, we all expected a correction. Did we expect that big of a correction in that short of a period of time? I would say I didn't. I really didn't. It's kind of shocked me how far we went here the last 2 weeks, and how poorly the mills as a group manage their order files. And then the customers really haven't been able to solve that problem themselves. They've got a bunch of high priced lumber still rolling at them too. So it's really affected everybody in the industry. Now we see Canfor cry uncle and throw in the towel and take 1,000 cars off the market. That's a good start. We're going to need to see more of that from other entities, and I think we will. And then the forest fires are always looming. And living out in the West here, I can tell you it's tinder dry. So, but you can't speculate on forest fires. What you can do is react to mill closures, and we're starting to see that. So that's good. I actually welcome that.
Thank you, Matt. Greg, right at you.
So, one of the things that I know, Ash, you and I talked about this, and I've had a lot of conversations where, there's people that are really unhappy right now, and they want to blame someone for what's happened to the market.
Yep.
And somebody says, well, who do you think is to blame? And I think everyone has to accept responsibility that they were part of the problem. And on the same token, no one's to blame. No harm, no foul.
Yeah.
And I say that is, listen, business has been really good, for a long time, and we got to unprecedented price levels. But there was a period in time when, instead of raising your price $50 or $100 a day, mills would have been better served selling a 3-month shipping file. And there was a period of time when customers, instead of paying $50 more than the day before for wood that was 5 or 6 weeks out, they would have been better off saying, you know what, I have enough right now. If anybody that was out there that, quote unquote, bought a bunch of wood because they were afraid they weren't going to get it, you got it.
Yeah. Oh, great point, Greg. Really concise. Love it.
You thought that was concise? I thought I was rambling.
No. So I want to bring up one of your comments from one of your LinkedIn posts about 4 weeks ago. And it kind of goes, let me see if I can find it here. I'm saying I'm finding it, but actually Nick's over there working on it for me.
Nick's way better at that than you are.
So yeah, I mean, Nick's better at doing anything, right? So it says next week. I
still owe Nick a practice round of golf for his next tournament. Just Nick.
Yeah. Hey, by the way, hey Chum, how are you doing? Chum just said hello, boys, on there. Hey Chum. So this is from Greg's post 3 weeks ago, Nick.
Right.
It said next week is a big test for the market. A gap below the trend line will propel it sharply lower into the 600s or mid 500s. Nobody thinks the 400 or lower is possible, and that puts it in play. If it can stand a reversal, probably going for a $200 to $300 rally. So, like I said, Matt, none of us thought it would do that, but these markets do that. Any comment on that one, Greg?
I sound way smarter there than I actually am, in retrospect.
I wanted you to say that, though. I didn't want to have to say that. Now let's then flex right over to your next poll that you put out Monday, Greg.
Yeah, I put the poll out on Monday, and I mean, it's still actually, the poll's still open right now. I put it as a 3-day poll, but so I mean, here's my conundrum right now. If I look at the poll, what the poll's telling me is that the market's going below 400. Because 81% of the people don't think it's going to get there. So, but then I have the other hand, I have the curtailment, I have the overall low level, I have the prices relative to the cost of production, blah, blah, blah. But I have to respect the fact that based on the polling, and if we've read the polling correctly, it's been pretty spot on in terms of helping you predict what was going to happen.
Yeah, it's interesting.
I put that as a cautionary note right now, and it's going to lead me into Ash, when we talk about basis. Okay?
Yes. Yeah, and I'm going to roll right into that, because if everybody understands, I put a little video out Saturday explaining what the CME actually means. We're looking at where physical was going to, or this was CME related, right, Greg? Or was this physical?
Yeah, I mean, the cash futures, it's kind of both.
So
right?
this is interesting.
It could have been either.
So yesterday, and the market traded this week, we can arguably say it touched 400. the cash market. It did. And so you put that poll out Monday. I don't know when it touched it, but it went to 400 and touched it, right? Now, at the same time, we're all sitting in the office yesterday and we're going, 400 at trade on cash, but the September is the spread's 150. So it's telling us that somebody knows there's something out there that nobody else does, because there's nobody selling that September market. Matter of fact, some people are buying it back, right? And then all of a sudden I go home and I see that announcement, right? I don't know if that's the whole reason, but Greg, let's kick over to your basis. You and Matt, the basis, what's your thought there? I mean, is there enough room to put wood on the ground in basis with the reloads being full on some of them? Or go ahead.
Matt, you want to talk about it?
Yeah, I think, some of the reloads are full around the country, but not all. And so if you've got low inventory and you've kind of stayed disciplined, I guess, throughout the last 6-7 weeks, if you're a distributor and you've been able to avoid any major mistakes in terms of your buying strategy, you probably have some bullets to fire at it. And I don't think you'd want to basis trade it today with an up limit move, but you'd probably be looking at some premium to sell into for sure. Why not? If we're going to be trading the futures market around 600 and you can still buy cash around 450, in your life, $150 1,000 basis trade's a pretty good trade. We don't often get those types of opportunities, so that would be in favor of doing that kind of stuff personally. I also want to say hello to Chum Hobson. I worked with Chum at Western International in 1995, 96. It's been a long time. So, hey, Chum, nice awesome to talk to you again, buddy. Hope you're having a great time.
But no, so the base is the spread. So why? What do you read into that, Greg? Because everybody's talking about it.
Yeah, well, and that's the thing, is everybody's talking about it, but people aren't taking advantage of it. I mean, I think one of the things where, like, hey, mistakes were made, others will be blamed. Risk management is like, I mean, in our industry, there is no risk management strategy anywhere along the way. And, when you look at obviously the volatility in the last 12 months has been exponentially greater than the historical volatility. But even going back to average historical volatility, I mean, I think that what's happened with the market is going to produce some profound changes in how things are done. I'm not smart enough to know how those are all going to manifest themselves, but I do know that you can't have what we just went through and not have some seriously smart people looking and saying, hey, this doesn't work, and do things differently. And we can talk about, as we can talk about that in relation to program business, Ash, when you're ready to.
Yeah, so let's talk about that. I was going to talk about the program business, but John Mattingly asked a question. Let's work real quick on cost of production. So I got a bunch of information on cost of production. I don't know how much I can share because I'm waiting to have the guy on that produced it to talk to him about it. But it looks to me, if you go 10 years ago, BC Interior was the lowest cost producing region 10 years ago, right? One of the lowest costs, arguably. Beetle kill, all kinds of stuff. Now the highest cost is the BC Interior. Pacific Northwest is the second. Stumpage cost, right? Pacific Northwest, Matt, you know better than I, it's availability of logs in the price. Eastern Canada is the third. The U.S. South is the fourth, right? So John Mattingly asked a question, is Canadian labor tight at the mill level as well? Has the break-even level changed drastically in 12 to 18 months? So I can only answer the break-even cost. Yes, it has gone up. I'd say last year the break-even cost was probably on a U.S. base, like $350. I'm just guessing here. But they have a moving average on log costs. And Greg, maybe you could fill that in a little bit, because we were talking before this that they basically move every quarter, right? Does that make sense? Or they have a sliding movement? I'm not sure. I sound like an idiot saying that. What do you think? What say you, Greg?
No, Matt, you have Canadian mills. How do you guys get by your logs?
Well, it's set by the open market pricing, right? It's a quarterly deal, so they just reset the prices on July 1st.
It's
So now you have,
it's net back pricing based on the
yeah, you have
finished cost.
extremely high log costs for this quarter because of what we were, selling lumber for last quarter and the quarter before. So it's like a trailing average type thing.
So high. So right now, those high numbers from a quarter ago are affecting the log costs in this quarter.
Yep.
And then low prices on lumber, on the actual lumber, will then have a lower log cost if we stay here the next quarter.
Yep.
Okay. So what does that have an effect if mills deciding? I mean, cost of production, we're probably a lot higher than 350 now, right?
I wouldn't think so. Yeah.
I don't know.
Yeah. Based on what we were selling lumber for in May.
Yeah.
Or early June. Yeah.
It makes sense, Greg?
Absolutely. Yeah. I mean, if I was going to ballpark, I'd say, hey, cost of Western spruce now is probably somewhere in the mid 400s ish, plus or minus, depending on the mill.
Yeah. So we basically 6 months ago, when everybody said we wouldn't go down to cost production again, we basically licked it right this week. So I wanted to talk about this. Greg, you brought it up last night when we were chatting on the phone, and so let's just talk big boxes or home centers, the ones that all around the U.S. They don't buy spot lumber, right? They buy program business, and so they are price takers, right? But they negotiate and do stuff, and they have a min-max they're supposed to take on contracts. And Greg, you mentioned something last night about the min-max and home centers wanting to negotiate right now again when lumber prices are low. And I just scratched my head. I'm like, why would mills want to do that?
Yeah, well, what I was looking at is, when I look at, the program business. So, and everybody has their own
different.
Everybody
stuff,
has their own deal. It's unique. Each supplier, each end user, all sorts of different ways to go about it. But in general, what I saw was there was a period of time last year where mills did not have product available because, quote unquote, their programs were taking it all away, and those prices were at substantial discounts to the spot market. And then I flash forward to where we are, like most recently, and I'm going back to who's to blame. Well, the program business with big boxes is to blame for the market fall down, because that's all that extra supply is what tipped us over. And there you have when producers need their program business the most, they're getting more wood available to sell in the open market. So I just asked myself, geez, is this a sustainable system or not? Or what kind of changes will transpire in the future that will change the landscape for the rest of us?
That's a good point. Yeah, no, I mean, look at
more questions than answers.
Yeah.
I mean, I can speak on that one. I would think you'd want to diversify your contract commitments with other people, right? If you really want to shelter yourself from this ever happening again, you're going to start looking for a way to spread that lumber around to other customers.
Yeah.
And so you might have been telling it like 2 or 3 years ago, you might have gotten a phone call in October, November from some regional distributor or retailer with multiple yards asking about contracts, and you just blew them off because all that lumber was committed to a big box store or some something like that. And now I bet you probably pay attention and say, let's have that conversation, because what's happened in the last 12 months with that business, as Greg alluded to, went from 1,000 miles an hour to 5 miles an hour, and all that extra lumber has just now come back into the market, and it did contribute to the deflation in prices. Absolutely.
Yeah.
At the same time, they want to renegotiate their deals, so they're hoping to, I guess, maybe they want to pit mills against mills and try to get better deals for themselves and more leverage. At the same, I don't know. It doesn't seem like that's really good for our industry in the long run.
Hey,
Bill
we
G.
talk housing starts, Ash? Housing starts came out the other day.
Yeah, so starts were good, permits were down.
Yeah, I was, you know, and the thing that I was looking at was completions and authorized but not started. Completions fell also, which, you know, basically is probably a testament to like all the other issues that builders have with labor and other products, and that's why authorizations are up 58.2% from a year ago to 258,000 units. Stand by. Yeah. 258,000 units. I mean, so there's a lot of pent up demand in the new home sector.
No, there's no doubt. One thing I wanted to touch on too, Greg, and talking to you, Matt, I was calling a few reloads because I had a few people looking for some new reloads. I called some in the Southeast and other ones, and I had some interesting comments. Matt, you're right. Some are full. They are full capacity and they can't take anymore. But I'm not as concerned about that than I am as who was in there, right?
Right.
They named people that had never reloaded before, large retail chains and new multifamily people that are builders. And so, and Greg, you said a lot of multifamily maybe came in and bought their third and fourth quarter needs on the way down here and covered some stuff and put some stuff in their pigeonholed some stuff into reloads. But the real interesting thing was some of the people they said were new players in the market. And this is what they got brought in months ago, right? In some cases. Eddie, am I reading too much into it, or is it just is what it is?
You know, hey, I mean, I'm back to who's to blame. Everyone's to blame. You know, I think, you know, you and I talked about, you know, when you saw the thing on the news in April that, you know, Habitat for Humanity had bought all the lumber they were going to need for the rest of the houses they were going to build this year.
Yeah.
You know, how much hoarding and how much purchasing was pulled forward, you know, during that time period when lumber was in the news. And, you know, that's part of what contributed to the problem.
Yeah. Any thought with you, Matt, on reloads at all? Are you noticing anything different at yours, or is everything's pretty much?
No, I mean, in Texas, I don't think inventory is a problem. I mean, in terms of like a whole bunch of unsold wood, jamming reloads. Like in 2018, I went and visited, I won't name them, but a reload in the Dallas Metroplex. And it was so full, it was dangerous to drive through. Actually, I pulled out of there because I thought for sure that a stack of lumber might fall on my rental car. And every reload in Texas was like that. It wasn't just one. This time around, I mean, I can speak for Hampton. We had virtually zero inventory in June and July. And, you know, we're just now starting to get some inventory back in on stuff that we bought in the last few weeks. So my biggest problem as a Texas guy is just getting my customers, the retail types, to engage, but they're still receiving $1,400, $1,500, $1,600 lumber that they wish they hadn't bought. So it's been hard to engage with them. But I think this will also pass through. Who is engaged right now is the job guys, the guys with apartments that they need to get started. Yeah. They got a home run. They went from losing $800, $1,000 on paper to making $300 or $400, $1,000 on paper on what they had stuff sold at from, you know, last winter or last spring.
I think that's why some people, some of them stepped in. So Bill G from Sherwood, a good comment. Based on a real-time conversation with a mill, presumptions are that labor is tight. As it is here, break-even levels are up, but not as drastically. And I think, Bill, you may be talking Eastern Canada here, which are they still are they're not as high as BC or Pacific Northwest, and I guess they have a little bit different log type of scale pricing. So good information. Mohammed Rashad said, what about the price trend in the next 3 months? We need to know what will happen for price and supply in the next 3 months. You guys know exactly what's going to happen, right?
Man, I wouldn't be talking to you right now if I could forecast 3 months out accurately. I would be living on a yacht somewhere in the Pacific. I'd have like a satellite phone and multiple residences. But it appears as though right now lumber supply is tightening up because of the big drop that we just went through. So,
yeah.
I mean, and you think about the reality is we didn't get to the prices that we got to in the first quarter before we had, kind of the final run up. I mean, hey, we got there because end use consumption was outpacing production. And so now we've had a drop in end use consumption at the home center level, and we've had certain increases in production. So, the market's always in search of equilibrium, but equilibrium is a moving target based on the supply demand. I'd say, hey, I think that home center business is going to be improving in the fall once we get past the 1st of September relative to the way it is now. We know we have pent up demand in the new home construction. So, the demand side looks probably pretty solid. So you go to supply side, at now that the prices have adjusted, how much new supply is there going to be, or how much less supply is there going to be?
No, that's great. So let's use this as an opportunity just to go through some different species. So Southern Yellow Pine obviously was the first one to drop. A matter of fact, here's the crazy thing that I see when I go into the home centers and do my perusing through the aisles. A 2x4/8 treated, in some cases, is cheaper than 2x4/8 whitewood, right? Because the Southern Pine dropped so fast. A 2x4/16 in Southern Pine treated at some stores is almost the same price as a 2x4/16 whitewood construction grade lumber. Kind of a crazy look at that next time you go to one of those, and it kind of shows how fast Southern Pine dropped, right? And I've had some Southern Pine people tell me, we made enough money this year where we're not keeping lumber on the ground at our mills. We are going to find the market. And they're just moving wood out the door, and they're doing a good job moving it. OSB just started dropping. It was the stickiest. I mean, we have OSB on the MX platform right now trading below 900, and anybody that's putting bids up there is getting hit on them. I mean, it stayed up there. The spot market on OSB was a $400 premium to the index, and now it's about a $100 discount to the index or more, right, on counters. So that's interesting. Now, Matt, Pacific Northwest, Western Canada, what are you seeing? You're kind of in the spot where there's a lot of action today.
Well, if you're looking at what the mill's advertised price is versus what they're actually taking in the last 48 hours, that number is like $100 to $150 separation.
Yep.
And now that is changing today. We're busier, obviously. The inbound phone calls and emails are actually improved quite a bit, and this is all in relation to curtailment news and pent up demand, as Greg alluded to. There's always going to be people that need to buy some lumber, but if they feel like the market's going down, they might wait till Thursday. If they have a reason to call you on Wednesday, they'll call you on Wednesday. So we're starting to see some Wednesday callers for a change, whereas in the previous several weeks we've had everybody just say, nah, we'll talk later, because they knew prices were coming off. I think people are starting to recognize that prices maybe aren't coming off anymore. And if you're going to get your bids in, maybe you should do it now. But I'm not overwhelmed with business at the moment. I still have some issues to deal with. So
yeah,
but definitely studs are better.
That's interesting. You said that, Matt. You're not overwhelmed with business right now. I think some people think when there's a curtailment like that, you would see all kinds of, John Mattingly, EWP is shipping on time for the first time in 3 to 4 months. Still allocated. Great information. Mohammed asks, OSB price starting to go down. Well, if you're buying it from a store that's still at $46 or $1,300-ish per thousand, at the distribution level, it's trading. People can buy straight trucks, Mohammed, now for under $32 a sheet or under $1,000 a thousand. So yes, at the one end of the chain, it's coming down. At the other end, it's still kind of sticky there. Greg, go ahead.
Well, I was going to say is as OSB and EWP and these other products, as the supply chain catches up, that's going to allow more end use consumption of commodity grade lumber, because that's ultimately this thing, that's slowing down consumption at some level, along with, labor is still going to be an ongoing factor.
Yeah, Matt, I totally interrupted you on that one. So that's kind of what your studs are getting better though today.
Yeah, I mean studs have moved down the most. Studs were the highest, and now studs got to be the lowest. No, I mean, you didn't really interrupt me. I wanted to ask Greg something. I wanted to talk about this a little bit. With all the flooding in Europe and the devaluation of our lumber prices, do you feel like there's going to be less European lumber hitting our eastern shores over the next 60 to 90 days, or do you think it'll just continue to be about the same?
I think my gut and this is just kind of really my gut feeling tells me that the next, let's just say 30 to 60 days, that stuff's all pretty much still in the pipeline from where prices were, 30 to 60 days ago. I think the time that you'll really feel it is once we get into, late September, October. I think that's when you'll really feel. That's when you really feel it, because that's kind of where the scheduling is right now for the next shipments, right?
Yeah.
So I think it's going to be a bigger issue in the fall. I mean, back to the question, I think that overall, if I'm right about home center business, and I'm right about authorizations and the pent up demand in single family, it's not unreasonable to expect that somewhere over the next several weeks that the market does put a solid bottom in and then begins a stair step grinding. And I think, Ash, you remember we've had a couple of these markets where you've had big shoot ups and then you come right back down, and then the market just begins that long, slow, grinding move up that's, really great for distribution, but it's also good for produce. It's kind of good for everybody. If you think about the last year, there's been winners and losers. When you have a slow, grinding up market that's above the cost of production, that's good for everybody in the pipeline, everybody in the supply chain.
For sure.
So,
yeah.
I want things to be good for everybody.
It's great until the media starts writing about us, and then the long-term rule is when the national media starts talking about lumber, it's time to get out and sell. It's like every time, man, like clockwork. Hey, the Wall Street Journal printed some story about higher lumber prices. Sell everything.
Yeah. Well, look, guys, I appreciate we're up against our half an hour, but obviously I'm biased because this is our show that we do together. That people are much better off getting information. Those Wall Street Journal articles are great, but everybody, it's very safe when they're talking in those, right? I think we kind of give the information, and quite honestly, I like creating our own content. I don't need to go to a big publication to do it, right? I think we want to do it out here and create it so everybody in the chain can see it. So again, guys, I really appreciate it. I'm glad you're both back, and we can start next week will be episode 17, and we'll think of some great stuff. Greg, what do you got?
So I was going to say, you were going to talk about cost of production with somebody. Do you have that scheduled, or?
Yeah, I'm trying to get the guy on, because I really want to go through the numbers, because there's so many different costs in the fixed and variable numbers that and the exchange rate and pricing that it's a lot to really chat about, right? And I want to give it it's real. We're so used to this industry just throwing numbers out there. I want somebody to come on and really dial it in for us so everybody can have an idea of where they're at. But I think we can safely say in the interior BC, we probably, where we're at today and the log prices, touch that cost of production at especially some of the high cost tolling facilities this week.
Seems reasonable. Yeah.
Yep. All right. Well, great, everybody.
Bye, guys.
Thanks for coming, Greg, Matt. We will follow up and get ready for episode 17 next week. And tomorrow, I've got Matt Lehman. We're going to speak in layman's terms, and we're going to have episode 17 then. So looking forward, same time. Please sign on. Thanks a lot.
See you, man.
See you guys.
You got.